Warnings about a looming stock market crash have grown louder this week as inflation levels soared and investors are getting increasingly concerned about Fed tapering. Despite the disruptions caused by the Delta variant, the emergence of several new virus outbreaks around the world, and a sloppy economic rebound, the U.S. stock market keeps rising and hitting new record highs. Since hitting bottom in March 2020, the S&P 500 has rallied by more than 45%. It just hit a new record high last week, now up more than 1% for the year. However, there are many reasons to believe that the rally is unsustainable and that overvalued stocks could face a reckoning and collapse soon. Already, several experienced investors like Jeremy Grantham, Michael Burry, Robert Kiyosaki have warned of an imminent stock bubble burst of epic proportions. In an interview with Bloomberg, Grantham, the founder of GMO, said his valuations in each corner of the market were at their highest level in history. This was confirmed by hedge fund manager John Hussman, who also cautioned about a stock market bubble burst earlier this month. Meanwhile, Burry, who's famously known for shorting the credit default swaps market just before the 2008 crash and the subsequent financial crisis, wrote this on Twitter: "Greatest speculative bubble of all time in all things, by 2 orders of magnitude." On the same note, Kiyosaki, the author of Rich Dad, Poor Dad, alerted his Twitter followers saying, "Biggest bubble in world history, getting bigger. Biggest crash in world history, coming." But these warnings are not as dramatic as the one recently shared by veteran investor David Hunter. Even though many market watchers and financial strategists in Wall Street see that stock valuations are extremely extended and will end up canceling returns in the long term, no one sees a stock market crash as sharp as the one Hunter is calling for taking place this year as inflation spirals out of control. The chief macro strategist at Contrarian Macro Advisors argues that the U.S. economy is in the middle of a massive bust, consisting of 2 phases. Phase 1 was the initial bear market and short-lived recovery we witnessed last year. We're now in the second phase of the bust, according to Hunter, which will lead us to a much steeper downturn than the first phase. The expert outlines that the government's and the Fed's stimulus measures have failed to boost many sectors of the economy that needed fiscal support. As a result, hundreds of thousands of businesses have gone bankrupt, and thousands more are still on the line. That's why David Hunter predicts we'll see much more insolvency during the second phase. On the Contrarian Investor podcast, the strategist said this: "We have debt beyond anything we can ever manage. When you get these surprises, that leverage really exacerbates whatever downturn you get." Last year, he stressed that the stock market would have a melt-up and hit new record highs before crashing, and the melt-up was exactly what happened after the March sell-off and led us to the current market. Hunter said back then, "What comes next year is a secular top that I expect to be the high water mark for decades to come. After markets peak, a global deflationary bust will ensue," he forecasts, noting that equities will face a historic decline. As for the looming downside, forget the retest narrative being touted by Wall Street strategists. I totally dismiss that. I don't use the term retest when you go back after another up leg to a higher high, so I think the retest narrative is just wrong, he said. Instead, what we will witness is a bear market of historic proportions, culminating with the S&P 500 around 800. Yep, you heard that right. Basically, the biggest bear market since the '29 crash, Hunter highlights. This downfall will occur very rapidly, faster than what we saw in 2008-2009. We can go from peak to trough in less than 6 months. The coming crash will be a result of decades of debt buildup and other forms of leverage. This dynamic worked great on the way up, which is why you had the highs we had, but they really punish you on the way down, and they also speed up any declines, the investor explained. In essence, central banks' virtually unlimited power to print money has flooded the system with liquidity, but now that inflation has started to show its ravaging effects, the Fed's approach will have to change because more artificially created money will only make the problem worse. Hunter notes, "What I believe follows this is our first inflationary recovery cycle since the 1970s, adding that we will see a global inflationary cycle, probably even that exceeds the one that ended in 20% inflation in 1980-1981. Before taking Hunter as an alarmist bear, well, just take a quick look at this profile on Twitter, and you'll see that he is just as bullish as most investors on Wall Street, but his bullish view is remarkably different than others. After all, he is one of the heads of a firm called Contrarian Macro Advisors. Just as many other experts, the strategist believes that rising inflation will be the trigger to the burst of the stock market bubble. Last month, the Consumer Price Index, a primary measure of inflation, went above 5% year over year, with used automobiles leading the hike. Although much of the government stimulus has already faded, consumer demand is currently at all-time highs as the economy reopens. And as the holiday season approaches, the potential for further upside surprises in inflation is definitely there. If it gets to a point where investors start to feel threatened, or if the Fed starts to shift its tone when it comes to tapering, stocks could continue down the path Hunter has predicted. The 48-year market veteran believes that the Fed will be forced to tighten policy much sooner than most investors anticipate. Hunter has a very specific vision of where markets could go in the months ahead. Up until this point, his predictions have been accurate. In December 2020, for instance, when the S&P 500 was around 3,700, what was then record high levels, Hunter forecast the index would surge to 4,500 towards the middle of 2021, on the higher end of Wall Street strategists' targets. Since then, it has hit a record high above 4,200. Earlier this year, he also predicted that yields on the 10-year Treasury notes would fall to roughly 1.2%, after climbing more than 80 basis points to 1.73% from January to March. Now, given that at the beginning of this year, markets were in an unprecedented frenzy fueled by the vaccine rollout and the heating economy, it was easy for investors to be bullish on stocks. Even J.P. Morgan said that the environment for stocks was a, quote, market nirvana, unquote. That's why Hunter's predictions look so interesting. He said it before and reiterated this week that he believes the S&P 500 will top in mere weeks from now. And even though the topping process might keep investors' hopes up for a while, as stocks may test their highs again after peaking, when the fall approaches, he says, stocks will begin their descent toward a 65 to 80% drop from around 4,500 levels. So, I believe in the next few months, you'll see. I've been calling from 4,200 to 4,500 on the S&P. I think you'll see that this year and probably by this fall. And melt up means it's gonna go parabolic. It's gonna get even steeper than it's been out of the March trough, he said. When investor exuberance ultimately dries up, the stock market can lose 80% of its value, the strategist added. When higher inflation remains, he said, the Fed will be forced to tighten policy by shrinking their balance sheet by slowing bond purchases, which would remove liquidity from markets. The booming stock market performance is attributed to high liquidity levels. A couple of months ago, the investors said the central bank could roll back about $1 trillion off its balance sheet. I think we are heading for disaster in terms of this idea that we can spend money like drunken sailors and have no consequences, Hunter underscored during an interview with Adam Taggart, the founder of investment advising firm Wealthion. Chairman Powell wants to call it transitory. I think some of his members disagree. Some of his fellow governors disagree already. And I think he's going to come to the realization that, yeah, some of it is transitory, but some of this is inflation that is not going to slow down anytime soon, he continued. And that's when I think they have to start saying, hey, maybe we've overdone this. Maybe we have to worry about an overheating economy and we have to go push against it. Which I argue that's why the Fed will be pulling money out of the system. I've been of the belief that inflation is going to get to a point where the Fed's going to have to tighten way sooner than people are anticipating, and that it will, because of the fragility in the global system, it'll lead to a much faster, much steeper decline than anybody expects, he concluded. Once again, his prediction seems to be right on track, especially considering that the Fed announced on Friday that they plan to begin tapering by year-end, as opposed to previous statements, ensuring that the taper process would only start in 2023. In a speech at the central bank's Jackson Hole Summit, Fed Chair Jerome Powell said that the central bank would have to start tapering asset purchases before the end of 2021, and that inflation has met the, quote, threshold for them to be comfortable with such a course of action, unquote. In response, stocks faced another jump as investors took the statement as a sign of economic strength and as proof that more strict tightening remains months away in the future. But Hunter believes that the Fed is going to be forced to take drastic action than just reducing the volume of bonds they're buying per month, which right now is $120 billion. They may even move right through taper to tighten faster than people think, meaning pulling money out of the system, not just reducing the amount of money they're putting in. As for when the stock market crash will happen, the market veteran believes stocks are close to a peak, and a subsequent burst will unfold over the next 2 to 3 months. However, he argues, if inflation indicators, whether it's the consumer price index, the producer price index, or commodity prices, continue to jump higher than expected, prompting a more serious Fed reaction than anticipated and blindsiding investors, the stock market bubble will explode way before they have time to run for the exits, resulting in what can be the greatest combined wealth loss in world history. Beware the risks, because things are rapidly changing, and a stock market crash of major proportions is just a matter of time.